Hello friends, this is Raj Sastry from Raj Option Trading. Today we will talk about a company called HOOKIPA Pharma. They're into healthcare and biotechnology, and they're a leader in treating cancer. Here is the image from their website. They are supercharging immunotherapy. It's a small biotechnology company and they're doing a good job. So with that, let's jump in. From a headline news perspective, they had this new study, and looks like in this new study, they really did a good job, and their data showed they have a disease control rate of 100, which is good. And they also had some patients have adverse effect in 53% of the patients. No serious adverse effect is always good. But Wall Street initially stock went up, but then companies really looking at slow ramp of this treatment, and also stock fell. They're into 5-month low right now, and SVB Leerink expects a near-term pressure. So looks like even though news is good, but there is some near-term pressure, and that's why initially Wall Street had high expectation, but since this is really some pressure in the near term, stock really tumbled really hard. So with that, let's jump in and look at this company a little more. So they are into this new class of arena virus-based immunotherapies. They got this new technology. I think it's really a proprietary technology here, and they got positive efficacy data, and they also have collaboration with the Gilead Sciences, and they also have a good amount of cash. They are not going to be running out of cash anytime soon. So with that, if you look at here, this is not a one-trick pony. They got multiple drugs in the pipeline. They got HB 201, 202, 301, as you can see here. They got a good number of drugs here. So I think these guys will do well. And they also work closely with the Gilead Sciences for last two drugs here. So with that, let's jump in here. From a company background perspective, HOOKIPA is a clinical stage biopharmaceutical company. They develop immunotherapies targeting infectious disease. I think overall, company is doing a good job here, and the CEO is John Aldag. Stock price is $10.70. I think they dropped even a little more today also. Market cap is around $300 million, and the stock, as you can see here, up, down, up, down, up, down, up, down. So normally, for biotech stock like this, I like to catch it when they're down and give it a day or two, then start buying slowly. So at this point, I'm in the accumulation mode. I'm accumulating this stock, and I'm not holding it for a long time. I will wait for a nice bounce and then sell it. As you can see here, buying opportunity went up. One more buying opportunity, stock went up. Buying opportunity, stock went up. Now stock came all the way down. This is a good buying opportunity. So that's why when stock falls like this, like a rock, on a good efficacy data, it's good to buy slowly and accumulate a good chunk of position, and then basically sell it as it makes its way up. Slowly sell, don't sell too fast, because stocks like this can really go really high on a momentum. So with that, the CEO, John L. Dag, looks like he's got a lot of history here. He also worked in various companies. He was CEO of Biotech, as you can see here, and he worked with the various companies in the past. So from a CEO perspective, he kind of checks out. He's in the industry for a while. He has the know-how. And from a news perspective, looks like their immunotherapy shows interim efficacy. That's the good news. And they also have favorable tolerability, which is also good. Overall, I feel it's a good story here. One thing to notice, when they announced the earnings back in May 12th, they reported a Q1 loss, but topped the revenue expectation. This company is not a consistent earning announcement type company. in their earnings, they kind of sometimes hit, sometimes miss. So that's why Wall Street really does not understand this company well, because they kind of flip flop when it comes to earnings. So with that, let's go and dive in here. If you look at the cancer treatment area, and look at the companies who do similar things like HOOKIPA, these are the companies that come to mind. We got BCEL, ALLVR, and so on and so forth. The way I organize these companies is really by 3 month performance. The company at the top, BCEL, it's got lowest performance in last 3 months. And as you see here, HOOKIPA is somewhere in the middle here. They got minus 10% in last 3 months. And then you got companies like, PDSB as an example, one of my favorite, and really like $11 stock, has done tremendously well, 220% in last 3 months. And then you got company like VBIV, VXRT, GOVX. All these are great companies, even Mustang Bio. I typically like to catch these stocks when they fall off drastically, just like the one we have in HOOKIPA right now. And you could do same thing as you look at HOOKIPA here. It's a $10.70 stock as of yesterday. It even dropped a little more today. $21 million sales and nice revenue growth. I love this revenue growth. But as you go further down, this is where you start seeing the problem. So you see 1 year 7.4% negative, 6 months negative 12.6%, 3 month again negative, 1 month all the way to 1 day, it's all negative. So this is where you got to go against the conventional grain and make up your mind and slowly accumulate. Given it's a very low dollar stock, you're not paying too much. I would not recommend buying option here, because stock can stay here for a while. Your option will really start losing money. That's why buy the stock outright slowly, accumulate a nice chunk here, and as the stock goes up, you can have a nice profit. As you see here, as you scan through this, many of these companies like BCEL has done great of late. As you can see here, 2 week, 1 week, 1 day, they did great. And as you scan through here, many of these companies, I think they are kind of rebounding. But if you look at Max MGNX here, it's been dropping a lot of late. Just maybe this stock is also good to buy slowly and accumulate a good chunk. As you scan through, same story here with the Halo. It's been dropping a little bit of late. And if you see a couple more here, I think these stocks are doing okay, including VIR. It's $46. They give very good opportunity. They drop a lot sometimes. That's when you buy and hold it. These biotech stocks are really good, especially early stage ones, to really buy when they crash and hold it for a month or two or even more and have a nice profit in a short time frame. So with that, let's jump in here. HOOKIPA Pharma, from a quick statistic perspective, this is back in April. Morgan Stanley basically had an overweight rating on this and a buy rating from Truist. As you can see, there are some positive news. This is a little bit dated, as you can see here, but stock had a price target of 19, 21, so on and so forth. From an earnings per share perspective, on a yearly basis, I think they're doing pretty okay. They were $2.41 negative earnings per share, became $1.69. That's a positive trend here. From a sales perspective, I love this chart here. Nice acceleration. I love this. 7.60, 11.90, 19.60. I think this is a good indication that company is doing well. From a shares outstanding perspective, it's pretty stable, as you can see here. They are not issuing a lot of shares. They're kind of controlling their dilution here. That's always good. And from a performance perspective, as you can see here, company has done nicely from a sales perspective. They have a $21 million sales. done nicely from 1 year sales, quarter over quarter sales perspective. Net margin is negative, meaning they're not making money quite yet. Low debt, which is always good. From a ROE perspective, it's negative. Company is not profitable yet. RSI is pretty low. It's good to buy the stock, good to enter at this time. Institutions are buying this stock, 66%. That's a very good for a small stock like HOOKIPA. And as you can see, they got some short ratio. That's why they are coming down a little bit. It's manageable, not too much. They're a little pricey from a price to sales perspective, but not too much. This is really manageable here. And stock has been dropping like a rock in the last couple of months here. 46% off of 52-week high. And also, as you see here, they got good volume. $3.8 million. Also, they did very good volume in last 3 months, which is 240 thousand shares. As you can see here, some of these margin numbers are not great because it's an early stage company. They're not into showing too much profit. They have to invest in their own company. Good amount of cash, 128 million. That's great. They have free cash flow negative at this point, which is not great, but understandable in early stage companies. They got low debt, as you can see here. That's always good. And as you see here, performance has been very bad at this point. So this is why I would think it's really good to start initiating a buy position, buy slowly and accumulate. So with that, let's get in here and look at fundamentals here. So the way to look at this chart is really we got quarterly numbers here, 331, which is March 21st, all the way to 6/30/2019. So if you look at the market cap itself, it's been increasing nicely, 170, 190, 312. Then it dropped a little bit. I would say it's increased a little bit, then it became a little bit yo-yo, up and down type. And now the market cap is all the way from 400 million back in 331 to 300 million right now. Even the stock price, it's been $6.73. Now it became 13, almost doubled. Now it's $10. Sales is pretty steady. It's about 42447, as you can see here. Pretty steady sales here. From a quarter-over-quarter sales change, I see some positive sales change here in last 4 quarters. I love to see this acceleration here. Revenue surprise perspective, this is where this company is a little bit unpredictable, as you can see here. Wall Street cannot put their finger on it because sometimes, as you can see here, there is a revenue surprise, but there is a EPS miss, as you can see here. Back in 12/31, there is an earnings surprise, also positive EPS surprise, but really unpredictable. Then it became earnings surprise negative, revenue surprise negative, and EPS surprise negative. So really, this is where Wall Street is having some tough time to really take this company in a nice way. They really cannot predict this company. It will go up and down. You cannot have a predictability from a earnings and revenue perspective. And there is nothing to brag about when it comes to margin. It's all negative. So this is where you cannot go with the traditional metric for a small early stage biotech company like HOOKIPA. Instead, you should catch it when they're a little bit low, like right now, and hold it for a long time. And if you look at their report here, they reported back in May 12th. They missed by 1 cent, and they had a revenue surprise by $1.33 million. Quarter over quarter or year over year, increase in revenue by 43%. That's very good. And they have a lot of positive news here. As you can see here, they got some preliminary phase 1 data. They had some additional indications here. They got a lot of cash here, 121.1 million. Revenue was good. They are also spending a lot of money on the R&D. I love to see companies spending money on R&D. This company does it, and they also had some increased R&D expenses, which is good. So overall, I feel there is nothing bad about this company. They're investing in themselves, and they want to be the leader in this cancer area. So with that, let's jump in and look at their performance. From a yearly performance, as you can see here, nothing to brag about. They were negative. They are negative all along. All the way from 2019 when they became IPO, 2020 negative, 2021 negative. But if you look at a little more on a monthly performance, this is where it gets interesting. So as you can see here, back in September, they dropped by 11%, and then they went up next 3 months. Dropped 3 months, went up 3 months. Dropped 2 months, went up 1 month. Again went up, dropped 2 months, went up 4 months. Now big drop. So this is where if you have some patience by looking at this chart here, you can be almost certain. The moment they drop like this, look at the past history here, drop, drop, drop. They always came back. So with that, because it's a low dollar stock, company is doing the right thing. There is some positive efficacy. I would, just go against the normal conventional grain and buy the stock, because they're, down so much. Company is doing the right thing, but right now there is some short-term pressure on the stock. And if you look at the weekly performance here, I think same story. It's really, as you can see here, stock went up, big drop, went up, drop, went up. So this is really where people love to invest in stocks like this, because they give opportunity. They have peaks and valleys. It's not a stable state company. It's got peaks and valleys. You look for these type of valleys when the stock really drops heavily, and invest, slowly accumulate. So that's why I like to invest in such companies, especially biotech, when there is a news which is not pursued well, or when FDA did not approve something. But we know companies like this will always go back and um, ask for the review again with the FDA. So that's why these biotech stocks are really good investments for you to just buy when they're low and wait for a couple of quarters and get a nice profit. If you look at daily chart here, say something similar here. Stock went up continuously, nice momentum here, came down. Now they're in a holding pattern. This is when you accumulate it in this pattern here, and then hold it for a while. Now, if you look at a monthly performance, the way to read this chart is I got the months here, in the row, and you got the years, 2021, 2020, 2019. This is when they became IPO. As you scan through this quickly, you will see around June time frame, it's really a little bit bad time frame from the company. Back in June 2019, stock dropped 21%. Even in May, they dropped, and then they recovered, as you can see here. Then drop again in September, then recovered again. Same story. They dropped here, recovered, dropped, recovered, and dropped again, recovered nicely. Now there is a drop. So I would think, by looking at this chart, you can almost be sure when the drops this hard, you could, maybe, there may be one more down, consolidation, maybe week or two, but they will always come back nicely. If you have, some patience and accumulate slowly, I think you'll get a nice reward here. So from a insider trading perspective, I see many of these insiders like this one here, the Capital FCPR 10% owner, looks like they sold a lot of shares, as you can see here, 3.8 million, 503,000. They sold a lot of shares of late. Um, I would not worry too much about this. These 10% owners, keep selling it once in a while, which is normal. I mean, I don't expect anything, any suspicious activities here, which is pretty normal here. And from a stock chart perspective, as you can see here, there is the earnings here. Stock came down a little bit. Earnings, stock went up. Earnings, stock went up initially, then came down. Earnings again here, stock went up, then came down crashing. So now they are below their 50-day moving average, clearly 25 and 9-day moving average. So this is where we have to kind of give it some more time, let it accumulate. As it's accumulating, you can slowly keep, as it is consolidating, slowly accumulate and buy shares. Low price stock, as you can see here, $10.70, even became a little more lower today. I would accumulate and hold it, and take it from there. When the stock drops like this, there is no point in looking at the chart. Chart is really ugly, as you can see here. RSI dropped all the way down, implied wall. There's a huge crash here, and DMI very ugly. The blue line going all the way down, red line going all the way up. It's a bear market for the stock right now. Volume average on the balance volume trending down, check-in money flow trending down. So you can't look at normal technical chart and look for some positive confirmation here. You are buying in the face of bearish negative news and accumulating. That's the way to go for these early stage biotech companies when they crash and burn like this. Next is option chain here. So I brought up this company here, HOOKIPA, October 129 days out. As you scan through this here, look at the volume here. They got a lot of volume. The 142 is the highest here. That's the 17.5. So in the option market, folks are betting this company will go to 17.5 by October 21. And if you look at Jan 22, a lot of people are betting the company stock will go to 15 by Jan by Jan 22. They got some call options here, and there are people betting it will go to 25, 30 also, as you can see here. These are really optimistic people, and they don't mind paying some 60 cents or around I would say mark is what around yeah, I think somewhere in the range of 60 to 185 cents they're paying. They're not afraid to lose the money, which is always good to know. Then if you look at put call ratio here, that will tell you what weights people are betting. There are a lot of calls, 3,518 calls, contracts traded here, and puts is almost 1/3, 1.039. That makes the put call ratio as 0.29, which is again bullish. A lot of people are betting the stock will go up. That's why they're buying more call options than put options, which is always good news. So with that, we looked at fundamentals, we looked at technicals. The overall, what we see is really fundamentals are okay, but companies really unpredictable from a earnings perspective. Sometimes they show positive, sometimes they show negative. There is no predictability. From a technical perspective, charts are ugly. Stock is really 5-month low. But if you look at the headline news, there is some positive clinical efficacy here for HPV 16 plus cancers. And also they show some unprecedented T cell response. That's why these companies spending a lot of money in the R&D. That shows in their results here. Stock is 5-month low, mainly because there is some near-term pressure. So I think this stock is clearly oversold. It's a very good buying opportunity. I'm buying it right now. I would hold it for a couple months or even maybe a quarter or two, and sell it for a nice profit. So with that, thank you very much. Happy investing.